Hey, hello everybody. Thanks for joining us here today. This is Mark Soberman with NetPicks, and I'm joined by Mike Rixey. How's it going, Mike?
I'm doing well, Mark. Hello, everybody.
Thank you all for joining us here today. I got to hit some volume off there. You don't want to hear me twice, that's for sure. Um, so anyway, we're this is the first time we've done a stream like this. Well, gosh, in years. Mike, do you remember years ago we used to do, I forgot about this, but we used to do a Friday, what was it, like a market? I don't know what it was. What was it?
It was kind of a weekly recap, and I believe we did was it a Google Hangout, is what I think they called it.
That's
And that would
right.
probably
Yeah. Yeah, Google
really,
Hangout, and I'm assuming it streamed on YouTube or something. Is that what it did?
I think it did. Yep. So we would get on, review some things from the week, kind of give a preview of the following week, which I always enjoy doing those. I think it's good to have the interaction, and I'll talk about markets all day long. So kind of
That's
glad we're
true.
doing this again.
Yeah, it's kind of funny. Like this has become such a very big thing. We were so ahead of our time. We didn't even know it. We were doing it years ago. I mean, even like
Exactly.
podcasting, I was thinking on my Apple phone, I've still got our old podcast from years ago, and that was all before podcasts became like this big thing like they are now. So once again, we were just too early. But who
Exactly.
knew? Who knew how relevant we were? Well, maybe we make some crystal ball predictions about like Bitcoin today, right? That's what we're here to talk about.
That's right.
Yeah, I guess
We'll
not
see.
Bitcoin. Pretty amazing though what's happening over there. But
It
we
is.
wanted to just spend a few minutes with you all today, kind of join in here live. We wanted to talk about webinar presentations that we have going tomorrow. That's Thursday, May 16th. And we're introducing this brand new Nasdaq options superstars that we're super pumped about. Really excited to introduce all of you to. So I thought what we would do, Mike is going to share a few of the charts and a little bit about this brand new system, and then I also wanted to kind of share with you the registration links because it's free. It's totally free. You can join us tomorrow. It's a free training, a free webinar. You get all the new information. I think you'll love what you see. I think this is the perfect strategy and system for really any individual trader. I've been saying for years that you need to have options in your arsenal. If you don't, you're really, really missing out. Anytime we do surveys and we ask people what they're trading and whether they're successful, it's always the options traders that have the highest success rate. So that's a reason why we really just do our best to get this type of system and strategy out there. So, Mike, maybe should we, unless you have some other comments you want to make, should we share your screen?
Yeah, let's do it. I've got some charts that I want to share. So let me go ahead and do that.
Cool. I'll go ahead and add that to the stream. So, all right. So I
Perfect.
do see your chart. And I should ask, I think in YouTube, you guys can ask questions as we go. So feel free to do that. I believe I'll see them here. But anyway, Mike, go ahead and take it away.
Perfect. Yeah. So, it's funny, Mark, you mentioned Bitcoin, and it's been incredibly active here lately again. But we're seeing a lot of different areas pick up. We're seeing equities pick up. We're seeing volatility. The volatility products have been incredibly active the last week and a half. And I know a lot of it's news driven with this whole trade war fiasco going on with China and President Trump tweeting every hour, it seems like these days. But the bottom line is everything is picking up in a big way. We saw a very active fourth quarter of last year. We saw one of the most amazing moves to the upside that I've seen in my career the first 4 months of the year. I mean, it was a straight shot to the upside. Very, very impressive. And then the last week and a half, we've seen volatility return in a big way. I bring this up it's because typically when you think you're going into spring, summer, markets tend to slow down. I just don't see that happening this year. I think the market's going to stay incredibly active. I think it's going to be a prime environment for us to be active in. And the beauty of trading options, the reason why I love to trade options, I don't care if the market's moving higher, lower, if we're moving straight sideways, doesn't matter to me. There's strategies that we can use to generate a consistent income regardless of what the market's doing. So really excited to share with you guys some of the new tools that we've been working on. We work with traders on a regular basis, and I get a lot of feedback from my students on what they're looking for, what's working, what's not. And we're always looking to press the envelope. We're always looking to create new tools that are going to improve results. Number one, if we can find a way to improve our profit numbers, our winning percentages, obviously that's a good thing. But even more than that for me, I want it to be simple. I want to simplify my trading. I've seen it in my own situation. I like to stay active on a daily basis. That's how I make a majority of my income from the markets. But over the last few years, what I've seen is I've gone from a stretch where I've had hours on a daily basis to look at markets to now I've only got a few minutes a day. I'm busy working with students, with customers. I'm working on projects for NetPicks, and I'm just going in so many different directions. I've got to have a way for myself to come in quickly, find my trades, manage my trades, and move on with my day. So I'm going to show you here today some of the stuff that I've been working on here over the past few months. We've been very, very busy testing this out, and just really thrilled with the results that I've been seeing. I have not seen results like this in quite some time. And let me just, before I get too far into that, let me just show the chart of Apple here, and let's walk through this trade in more detail so I can bring this all together. My whole goal with this new program is to get in and out in around 5 minutes a day. Now, for some of you, that might sound unrealistic because you might be spending hours a day looking at charts. What you're going to notice here is we're taking a few new steps that we've never taken in the past to really simplify it. We want to be able to quickly identify the trades, but what's really been hanging a lot of people up is trade management, because when you get those trades on, it's easy to have that emotion take over, and you feel like you need to watch that trade all day, every day, just to make sure you're not losing money. In reality, it's a very difficult situation to be in because the emotional side of trading is what holds a lot of people back. What I want to do is have tools that will identify the trades for me, get my trades on, and let the trades do their thing. I do not want to be stuck tracking things all day long. I'm just not a very good trader when I look at the markets all day long. So what I've done here with this new system, you notice you've got two different histograms down at the bottom. We've got the one at the very bottom, the red and the green one. That's what we call our sentiment indicator, and that's what helps identify the trending type moves. One of the areas that I've had feedback on from our students is looking for the opportunity to catch some of these trending type moves. I am a big believer in trading reversal setups. I like to look for reversals off of overbought and oversold conditions. That's worked out really well. But as this market continues to show these long-term trending moves, I also want to have a better opportunity to catch those moves. And the sentiment indicator does that for us. The red and the yellow histogram above it, that's what we call our pulse indicator. And that does a couple of things for us. It does act as confirmation for our trend setups that we look at with the sentiment indicator, but it also helps us identify whether we want to buy an option or whether we want to use a credit spread. And that might be a new concept for some of you. Some of you might be solely focused on buying calls and puts. I've gone from teaching that to my students a number of years ago. And I definitely am a big believer now in having a mix of different trade types. I think you want to have vertical spreads as part of your trading portfolio. They just do a tremendous job of controlling your risk in a better way. It also sets you up to benefit from different types of market conditions. If the market's moving higher or lower, there's things that we can do. But when we get into that dreaded sideways choppy price action, there's also strategies that we can use specifically with vertical spreads where I can benefit from that. I can make money from the time decay adding up, and that makes a huge difference in the growth of my equity curve long term. So let's take a look at this recent trade. Actually, we just closed this trade out yesterday. So on Apple, I marked the setup candle with this white arrow on my chart. Now, why was this a setup? There's a couple things that I need to see happen here for a setup to become active. I'm looking at the sentiment indicator down at the bottom, and I need it to go from green to red. And you can see that it did right in this sequence here. Once I went red, it put me in a bearish mode. I'm looking for short setups at that point. On its own, it's not enough for me just to jump in, buy a put spread. I need to wait for confirmation. And that comes in a couple of different forms. Number one, I've got my moving averages up at the top of the chart. These are the 5 and the 8 period exponential moving averages. I need to see a candle close below those moving averages, and I need to see a candle close red. So we had that right here on the candle that I marked here with that white arrow. I also need to make sure that before I trigger into this setup, I need to see 3 lower highs on the pulse indicator. And you can see on my yellow bars down at the bottom on the histogram, we did get some lower highs that confirmed that we were in a trending move to the downside at that point. So we triggered in on the very next candle. I came in and I bought the 205 195 put spread. It tied up around $395 of capital per spread. The whole goal with this approach is I want to trade the high flyers. I want to trade Apple, Amazon, Google, Netflix. I want to be active with those tech names. But I also want to make sure that I keep my costs at a reasonable level. With our trades, we're going to typically tie up between $60 and $500 of capital per trade. I know that's a wide range. It'll depend on what strategy we're using. It'll depend on your account size, what you feel comfortable with. But that's the range that we're typically in. In this specific trade on Apple, we were tying up $395 of capital per spread. It was a bearish position. I did want to see this move come to the downside. I wasn't expecting it to happen so quickly, but it did, which is great. If you're a NetPicks user with a previous system or a previous program, you know that we're big believers in having defined entries, targets, and stops. We want everything outlined for us ahead of time. You actually don't see target and stop levels on the chart. In the past, we have based our entries, targets, and stops off of the stock price, and that's how we've managed our option positions. We're taking a vastly different approach here. The problem that we ran into with that whole idea of managing our option position based on the stock price, it takes a lot of time. And when we get those sessions where you get those quick moves, I was finding that my students were missing things. They were getting into trades late, they were getting out of trades late, and it was becoming frustrating for them, specifically for those people that were working part-time or full-time, just didn't have time, to look at the markets all day long. So instead of focusing our trade management off of stock price, we are going to focus our attention on the price of the option. Our initial target zone is going to be 100% return. I'm looking to double my money on this trade. On the risk side, if the trade goes against us, which they will from time to time, we're going to have losers. I'm going to look to limit my risk to around 50% of whatever I put the trade on for. So in this case, fortunately, the stop didn't come into play, but had it come into play, I would have been risking just right around $200, just under $200 per spread. In this case, you can see that we all know what the market's done over the past week and a half. We've kind of seen this thing fall out of bed here a bit. We saw this move to the downside, and I ended up closing out of this position here yesterday. Booked a $395 profit, 100% return. We're in and out about 6 days, 6 to 7 days or so, which is very typical. A typical holding time for us, anywhere from 5 days on out to a month or so, is very typical. That's what we classify as swing trade.
And you can hold multiple spreads too, right? So this would be assuming you bought one spread, but there's nothing that stops somebody if they have the account size to buy 2, 3, 4, 5, and so on. Is that correct?
Yeah, absolutely. So that's the beauty of trading some of these liquid products. If you've got the bigger account size, there's no reason why you can't trade 5, 10, 15 spreads here. These are very liquid products. So the whole goal of keeping the costs low is I want to give that flexibility there. If you've got a smaller account size, fine. If you've got the bigger account size, that's great. I mean, I've traded Apple with 40, 50 contracts, 40, 50 spreads, and there's no issues getting filled there at all. And that's the beauty. You're setting yourself up for long-term success because you can scale your account. You can scale things very quickly because the system doesn't change. The setup doesn't change. All you're doing is adding a second, third, fourth, fifth contract. And it becomes very simple from there to manage your risk. So
let me also share some links for tomorrow's webinar. I got a couple people asking for that, so just to make sure that those are on there. Sure. I'll put them on the screen while Mike is chatting here some more about this trade and the next trade. So we have this webinar tomorrow. It's just got Eastern times on here, but we have 3 different times, and you'll see the link so you can get yourself registered, learn a lot more about the system and what Mike is sharing here today, and also how you can actually start taking these exact same trades that you see described here. I mean, who wouldn't want 100% return, like Mike said, in 6 or 7 days with very minimal and controlled risk, and actually us doing the work for you, identifying these opportunities. So Mike, I'll just kind of like put those up on the screen, the different times that they can sign up, and then you can go ahead and continue on.
Perfect. Yeah, thanks for sharing those links. So yeah, the beauty here too, if all we did was take this trade with one spread, we're talking about a $395 profit. That's one trade. It's a nice little supplemental income. But when you start to add in the multiple spreads, the multiple contracts, you can really start to do the math in your head. It adds up to a big number. You start to add in multiple trade types, right? You add in Apple, Facebook, Netflix, QQQ. There's so much opportunity there to diversify, to get the returns that you're looking for. it just, the results that I've seen have been phenomenal in so many different areas. So again, this trade worked out really well for us, a nice return there for me, and it takes the guesswork out of the equation. Here's the beauty. If I know that I'm targeting 100% return, I can create my closing order the very moment I put the trade on. If I know I'm going to buy that spread for $3.95 and I'm targeting 100% return, I can create my closing order that very moment. And I can set it to a GTC. And for those of you that are not familiar, a GTC order is a good till cancel. So I can create that sell order. It stays active until either it gets filled or until I cancel it. That way, going forward, if it takes 5 days, if it takes 3 weeks, those closing orders are in there working. I'm going to get filled on those orders, even if I'm not by my screen. So if you've got to get the trade on, get back to work, if you've got other commitments throughout the day, it's a perfect way to get those orders working and not have to stress all day, whether you're missing things or not. Everything's already set in place, which is really, really simple, really, really easy. And I've really enjoyed taking that approach. Let me move on over to Baba. Now, when people hear about the Nasdaq, it's really easy to think that the Nasdaq is only tech stocks. I mean, certainly the Nasdaq is heavily influenced by the tech sector, but you can go through the Nasdaq names and you can find retail names. You can find, obviously, tech. You can find some energy products on the list. There's a lot of different areas that we can focus in on. The setups, what we look for in a setup does not change. That's the beauty. The criteria is the same regardless of what type of product, what type of stock we're looking at. Allows us to spread our risk into many different areas. Now, here's Baba. This is a trade that's actually still in progress for me. The criteria, again, I'm using my sentiment indicator down at the bottom. It went from green to red. I did get a candle to close below our moving averages up at the top. Had a red candle right here, and I marked it with that white arrow. And I was looking for price action to break below that red candle. And we got that to happen here. So as soon as we saw that trade trigger in, we came in and we bought the 185, 180 put spread. And we paid $228 per spread. Again, like Mark mentioned, you can trade this with 10 spreads if you wanted to and still only have a couple $1,000s at risk. You can really scale and really fine tune your risk depending on your account size. But at the bare minimum, it's $228 per spread. Now, I'm targeting 100% return. And when I checked in on this thing here this morning before the market opened, it was trading for around $4. Baba has rallied up here along with the rest of the markets, up a few bucks here today. So as of this morning, we are approaching a target level. If I sit there and watch this chart all day long, just trying to track every little tick up and down, that's going to drive me bonkers. It's going to drive me crazy. I would rather get my orders in. Hit a stop, don't hit a target. We just let the order work. I've got my closing order in. I'm targeting 100% return. I've got that order in. If I get filled on the trade today, tomorrow, great. We'll book the profit, move on to the next trade. So currently have a really nice profit on the trade. It's I'm not going to say stress-free, because anytime you have money at risk and you're active in the markets, obviously there's going to be stress, but we minimize it by having these rules in place. Now, I think the best part about this type of an approach, some of you might be saying, yeah, in fairness, Mike, we've seen a pretty big move to the downside, right? I mean, this market's been getting beat up. Really easy to come in and find bearish positions that have worked over the past week and a half because it's been pretty broad based. We've seen a lot of stocks get beat up. What if we don't get the big movement? What if we kind of get the market to drift sideways or maybe drift slightly higher or slightly lower? What are our options there? If you're just trading long calls and long puts, you're limited. You need those big moves. That's the only way that you're going to make money. Well, here on Facebook, granted, we have seen a move to the downside. You can see it here on the chart. However, what I did in this case, one of the other setup types that we have built in is on the pulse indicator. You can see this whole slew of yellow bars. All I need for this setup type is I need 3 out of the past 5 bars to show up as yellow. That's the minimum requirement. If I have that, that gives me the green light to sell a call spread. I can use a credit spread. Now, that concept might be new to some of you, selling a credit spread. The reason we like to do those types of trades is it puts the time decay in our favor. Every day that we hold the position, we get to make money from the time decay adding up. If you've bought a call or a put option in the past and you notice man, I'm losing money on this trade every day. Yeah, even if the stock's moving in my favor, why am I losing money? You can lose money just from that time decay adding up. An option is a decaying asset. It loses value every day that you hold it. However, if you sell it, if you sell a credit spread, now you're making money from that time decay adding up. So what we did here on Facebook is we came in and we sold a call spread. Let me go over to the trade page here a second, because this trade is actually in progress. And let me pull it up. All right, so what we did on this trade, I went over to the trade page inside of the Thinkorswim platform. And what we did is we went out to the June 7th options and we sold the 192.5 at 195 call spread. Now, I put this trade on here last week. Now, fortunately, we had to move to the downside, but the best part about this, I didn't need it. If we just moved straight sideways, I could have made money on this position. I'm currently up money on the trade. I have a closing order working for 25 cents. I'm looking to buy this trade back for 25 cents. Right now, we're trading for around 37 to 40 cents, somewhere in that range. So I need this thing to lose another 13 cents of value. And if it does, I'm going to close out of the position and book the profit. Again, have I looked at this trade so far today? Not since before the market opened. I've got my closing order working. If I can get filled, great. Book my profit, move on to the next trade. So this is another way, if I go back over to the chart, by selling the 192.5 call spread, all I need to have happen, let me go ahead and put my crosshairs on the chart right around 192.5. I need price action to stay below 192.5. I don't care if it falls out of bed. I don't care if it drifts sideways. It can move slightly higher from here. I'm okay. The only move that hurts me is a big move higher above 192.50. So it takes the pressure off needing a directional move.
Yeah, so that's the best thing right about this trade, Mike. You can win multiple different ways. I mean, there's only like one possible way that you don't, but then you have multiple different things that happen when you're profitable. If you were to get to your target, what are you looking at as far as like the overall gain on this trade? What do you expect anyway?
Yeah, so for the Facebook position, anytime that we sell a credit spread, number one, they tie up far less capital. We're talking on many of these trades less than a couple $100. On the Facebook position, I'm trying to pull up my fill price here. So whatever you collect to put the trade on, that is the most I can make on the trade. So I know what my maximum profit is. I know what my maximum loss is right up front. And on Facebook, it's coming up right now. And of course, Thinkorswim wants to slow down on me here.
It knows you're live.
Yeah, exactly. So on the Facebook spread, we collected 94 cents per contract. It tied up $156 per spread. So you could have put it on 10 times and had $1,500 of risk. The $94 per spread is the most I can make on the trade.
Great.
And right now, we've got about 50% of that profit potential already showing up for us. Now, Mark mentioned, we can make money multiple different ways. The only move that hurts me directionally is a move above 192.50. So I make money if the stock moves up, down, or sideways, as long as it stays below that level. I make money from time decay adding up and from volatility decreasing. So I do have 5 ways of making money on the position. That $94, and you look at that and you're saying, man, $94, why are you getting excited about that type of a position? Well, number one, I'm only tying up $150 to begin with. So again, if I put it on 10 times, tie up $1,500 of capital, now all of a sudden I've got just under $1,000 of profit potential, and I make money 5 different ways. So as much as we would all love the market to make big directional moves and to see those huge returns with long calls, long puts, we love it when they happen, but we know they don't always happen. And there's going to be times where the market just kind of chop sideways. And this is a way that we can navigate through those stretches, add in another layer of diversification, and make money in multiple different types of market movement. So, and then too, I should mention that this is a risk-defined trade. So I know what my maximum loss is up front. A lot of times people get intimidated by credit spreads because they think they can face massive losses if a trade goes against them. It's just not the case. You're still in a risk-defined trade. And in fact, if you really dive in and take a look, the credit spreads, the debit spreads, they're actually much safer positions. when compared to just buying an outright call or a put. So that's why we love to use them. And what I've showed you today with these different types of trades, we could train you how to look at the charts. Right, that it's a very simple system to use. But what we've done, what you'll see here in the webinar on Thursday, we're actually going to offer you a way to take part into our signal service where we send out the trade alerts for you. We do all the hard lifting, we do all the research for you. All you'd have to do is piggyback on our trades. And we've got some really cool tools that we've developed. We've actually got a new NetPicks app that's ready to be released, an app that you can put on a mobile device, on an iPad, on an Android device, and you'll be able to receive the alerts anywhere you have a cell phone connection or an internet connection. You'll be able to receive those alerts. So you're always up to speed with what we're doing on our side. So would love to see you join us on Thursday. We'll have more time to walk through some additional chart examples. We'll walk you through what the program looks like, how you can get access to it. You're really going to want to take advantage of these tools. It's just been a game changer for me over the last few months. Like Mark said, I've had so much fun here the last few months. I've been super excited, more excited than I've been in a long time about trading with these new tools. So, Mark, any other questions that you've seen come in?
No, that should be it. Let me share on the screen one more time, just the links. I think we've shared this a few times, but join us Thursday, May 16th. Get yourself registered at one of these 3 sessions. Even if you're not able to make one, the people that register will get the replay link. So I really highly suggest that you do that. And I think the key, like Mike said, this is a true done-for-you service. So for some of you listening, especially watching this YouTube replay later, you may have a lot of options experience. So this really, is very clear to you. For others, this might be new, some of this, but I don't think what's new is seeing, you understand these names that we're showing you. You understand that these are the best Nasdaq stocks out there, not just tech, like Mike said. It could be in retail, biotech, banking, etc. But these stocks move, and they move up and down. The key is, Mike's somebody who's been doing this for a couple decades now, involved in trading and trading options, and he'll be sharing with you all of his best trade setups, like he's showing you on the screen. We'll put that out. And all you have to do is just take action, even if you're still learning. And we're going to teach you because we think it's important you have a good knowledge base. But imagine just having this almost like hand fed to you, having somebody like call you up and say, "Hey, go ahead and take this trade. This is the the setup, and all this particulars are right there." Right, Mike?
Yeah, exactly. So I just wanted to show this. Even if you had, like Mark said, no experience trading options, when we send out a trade alert, we're going to tell you the exact option or options that we're trading if we're trading a spread. We're going to tell you the price that we're looking to get filled at. We're going to let you know when we're getting into a trade, when we're getting out of a trade. So it's a great learning tool. I mean, obviously, I want to empower you to take control of your trading. We're going to train you along the way on how to utilize the tools, how to take the trades. I've got a very basic screenshot of the app. This is a mobile app that we were talking about. This is actually an earlier screenshot, so it'll look a little bit different once you have access all of our live picks. You'll know what our long-term performance is. You'll have the opportunity to interact with us. So if you have questions throughout the day, if you get home from work at night, say, "Man, what do I do here with this position?" the following day, you can always message us. We'll get back with you right away, right in the app. So just a really great way to stay engaged, making sure that you have all of the support that you need from start to finish. So it's not going to be one of those services where you sign up, you get an alert from us, you never hear from us again. I mean, this is stuff that we're using to stay active, and we're engaging with you all the time to make sure that you have all the information that you need to be successful going forward. So again, super excited about some of these new tools that are going to be launched here this week.
Awesome. Well, yeah, that was great. I appreciate it, Mike. Thanks for the demonstration, and we have a lot more to share tomorrow. So we'll be doing that to all of you who join us there. So yeah, I guess that should do it. So thanks everybody. Thanks for joining us, Mike. Thank you.
Yeah, perfect. Thanks guys for joining us, and look forward to seeing all of you on Thursday.
All right, take care, everybody.